push the market down to retest this point and then grab the liquidity for the bulls to push the market upwards. So as you can see at this point, we can clearly see that the market is going for a buy, right? Okay, so in most of my videos, I usually explain simple price action strategies while I'm actually trading. So sometimes some information might be left out because I'll be in a rush, or some important information might not be well explained. So I've decided to make a video whereby I just explain simple price action strategies that I can find in this chart so that you can understand. So I've already identified the Quasimodo pattern and also more like a falling wedge. So in this video, I'm going to try to explain everything related to these two strategies so that you can thoroughly understand. So make sure you watch the video to the end, and I promise this is going to be worth it. So we are going to start with identifying the trend, right? So as you can see, the market was in a downtrend from this point up to the down point, as you can see. So what do we need to identify that the market is in a downtrend? So as you can see, the market was forming higher highs. So this one was the latest higher high that was created at this point, and then the market started creating lower lows and lower highs. So that's what we need to identify a downtrend. So a downtrend is a constant, is a channel of constant lower lows and lower highs. That's what we need to identify a downtrend. So as you can see, the market was forming lower highs and the lower lows up to a point where it created a lower low at this point. So let me put a marker on that point. Let me put this shadow zone that is marking the higher high before the market started the channel. So at this point, as you can see, this was the higher high up to this point where the market created a lower low. So once the market created a lower low, this was the latest lower low that was created by the market. So let me make sure that it is long enough. So as you can see, this lower low was further discarded by the change of character that happened at this point. So what do we need to identify a change of character? So what we need is we need to identify the latest lower high that was created before this lower low, before the market created this lower low, right? So this was the latest lower high at this point. So once this point is broken down to the upside, this is known as the change of character. So a change of character simply signals that the market is now changing from either the downtrend or to the uptrend, or vice versa. So as you can see, after the market did this change of character at this point, and then it then came back because the bears tried to regain the power that they had lost, but then the market continued pushing upward. So here is the two patterns that I explained earlier. So at this point, as you can see, there was a channel that was created. So let me put a line so that you can clearly understand. So as you can see, there was a channel at this point, right? And then this channel was broken to the downside, right? And then let me put another line at the top. So these two lines are the lines of confluence, i.e. the support and resistance lines. So as you can see, once this point was broken to the downside at this point, the market came back with a retest back into the trend, because we know that more often than not, the market, this falling wedge breaks to the upside more often than it breaks to the downside. So we know that the market is eventually going to go back into the trend like it did right here. So once it went back into the trend at this point, it then came back to retest this support line once again, and then as signaled by that hammer at this that hammer over there, the market started going up again. So this shows the bullish power. And then on this pattern, on this whole pattern, we can actually identify that the market is now going for a buy. And then in conjunction with other trading setup, I'm going to identify another pattern that is also supporting this falling wedge. So as you can see right now, there was a Quasimodo pattern, right? This Quasimodo pattern was inverted, unlike the one that you know. So as you can see, we joined these 2 points, right? So once we join these 2 points, we also join these 2 points at this. So these 2 points are joining the higher highs, right? Or the highs, because this one is a downtrend, and then these are joining the lows, right? These are all lower lows. And then the market created more of a support that it once broke to the downside and became resistant, and then it broke it to the upside once again to create to make it a support again. So we are now going to put a shadow zone again so that we can clearly identify that a resistance line. So at this point, you can put a support line here. So as you can see, this clearly signifies that this is an area of bullish power, because it was the market failed to break at this point once, and then it came back again to grab the liquidity to break to the downside, and then it broke up to this point. But then the bulls were powerful enough to push the market upwards, and then since the bears cannot just lose the fight just at once, it had to push the market down to retest this point and then grab the liquidity for the bulls to push the market upwards. So as you can see at this point, we can clearly see that the market is going for a buy, right? At this point, we can clearly see that the market is buying. Do you know why? Because there are two patterns that are in conjunction, and they are all supporting the same thing. So this is simple price action, because you know that there are no indicators. As you can see, this moving average line is just there. I never used it. It's also important to use it, but then at this point, I'm just going to use the simple price action strategy using naked chart analysis. As you can see at this point, it is clearly a buy. So you can actually execute your market over here. So let me put another line. You can execute your trade over here, and then in terms of take profit, you have to put it at this resistance line, or you can just wait for it and then you close manually. But then in terms of stop loss, it is recommended that you put it slightly below the head of the lower low that was created, or you can just put it at this line that was created a very long time ago at this point. So this is what you need to know about the falling wedge and the Quasimodo pattern that are actually working together. So this one is a clear setup. I'm just going to execute the market, and maybe in the next video I will show you the results. If I lose, it happens in the forex market, but then I'm quite confident that this market is actually going to buy. So without wasting much of your time, I think that was it for today. So make sure you subscribe to this channel. Click the link in the description box below to create an Aylex account or a Deriv account, and make sure that you don't get left out in the 30-day challenge, where I'm going to take you from beginner level to expert level. So make sure that you are on board. See you in the next video.